Welcome to Multibagger Shares. I'm Manish Goel, SEBI registered research analyst, and today we're discussing one of the most dangerous biases in investing: the narrative fallacy. The narrative fallacy, as described by Nassim Nicholas Taleb in The Black Swan, is our brain's tendency to construct coherent stories to explain complex events, and then mistake those stories for actual causal explanations. Think about the last time someone pitched you a stock. They didn't show you balance sheets or cash flow statements. They told you a story. This company is building India's answer to Tesla. This pharma company has a molecule that will cure cancer. These narratives sound electrifying, but they are traps. Here's how this destroys wealth in Indian markets. Pattern 1. The India Growth Story Trap. A small cap company in EVs or logistics presents at a conference. Management paints a $5 trillion economy picture. Investors bid the stock to 150 times earnings. But the actual numbers show negative free cash flow, rising debt, and declining margins. The narrative was real, but the company's ability to capture that growth was fiction. Pattern 2. The disruptor narrative. Remember the new age tech IPO frenzy? Companies with zero profits and massive cash burn came to market with stories about disrupting traditional finance. The stories were magnificent. The stock performance after listing? Devastating. So how do the greatest investors defeat this? Warren Buffett reads 10 years of annual reports before reading a single news article. He looks at return on equity, debt levels, free cash flow, and capital allocation. Only after the numbers pass his filter does he consider the story. At Multibagger Shares, this is exactly what we practice with our 95-factor analysis framework. When I analyze Titan Biotech, currently trading at 503 rupees with a market cap of 2080 crores. I start with hard data. ROAS of 16.9%. ROE of 15%. Debt to equity of just 0.02. These are facts, not stories. The key distinction is this: the narrative fallacy doesn't mean all stories are false. It means you should never invest because of a story. You invest because of numbers. And a good story is just the cherry on top. Here are 5 practical steps to protect yourself. First, create a numbers-only checklist. Pull up 10 years of financial data before reading any analyst report. Second, write down the bear case for every stock you're excited about. Third, check promoter actions, not their words. Are they buying shares or pledging them? Fourth, wait 48 hours before acting on any exciting stock tip. Fifth, study failures, not just successes. Remember what SEBI found: 9 out of 10 individual traders in F&O lost money. The narrative of smart trading is perhaps the most expensive lie in Indian markets. Focus instead on concentrated portfolios of 5 to 10 deeply researched quality stocks. As Buffett says, wide diversification is only required when investors do not understand what they are doing. Do the hard work. See through the stories. Trust the numbers. Thank you for watching. Subscribe to our channel and join our Telegram community at Long Term Equity Y for daily value investing insights. Visit multibaggershares.com for more educational content.